Good morning, you've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao. With me is Varun Hirmath. And Varun, the markets are looking quite okay at this juncture. The quantum of losses is not very alarming. Nifty just testing that 14,000 levels. Sensex also trading flat with a loss of about 0.2% at this juncture. Broader markets continue to hold their head above the water. You have the small cap index gain about 0.4%. Mid cap index is also up about 0.4% in trade. As far as Nifty is concerned, like I said, 14,000 is where it's exactly perched at. Definitely a smidge below where we had opened because the day's high was above 14,100 and we have given up a fair bit from that juncture. But right now the markets are largely trading flat and it's being aided by the rally in the metal space, which continues to be higher by 2.5%. You also have some names from the auto index, pharma index as well, looking quite resilient in trade. On the flip side, some selling pressure coming by in the banking stocks. Nifty Bank is about 0.1% lower. You have Nifty Realty also under pressure. It's down about 0.6%. But definitely the day belongs to metals as well as pharma and auto names. Advanced decline ratio still in favor of the advances. You have Hindalco, Tata Steel being the top gainers on the benchmark index, up more than 3% each. Eicher Motors is up 2%. You have Bpcl, GAIL and Tata Motors, ONGC, JSW Steel gaining all of them in the excess of 1.5%. But on the flip side, you have a Kotak Bank down 1.5%, Hero MotoCorp down 1.3%. Some pressure coming by for HDFC Bank. It's down more than 1% in trade. So is HDFC Limited. Bajaj Finance, Adani Ports, as well as Asian Paints among some losers as far as the benchmark index goes. Varun.
For that, Karunya, I guess the gist of what Karunya was saying right now is that markets are holding fort above 14,000, and that's decent. We slid off a little bit towards the close of last week, and SGX was hovering at 13,900 all weekend up until this morning when we saw the Dow futures reverse quite sharply, and then of course SGX went above 14,150. So who knows, this could just be consolidation. Perhaps we do have some more steam left to take us higher later on in the session. But let's quickly bring on the BNSN quiz question for you. And at 11:45, we'll be announcing the winners. Which of these airlines has the maximum market share? Obviously, Indigo isn't one of your options because it's fairly obvious. Your options today are between the other competitors, Go Air, Vistara, Air India, and a SpiceJet. Please tweet to us on the ET Now handle. And if you are one of the correct viewers who've got it right, we'll feature you at 11:45. Let's also address the BNSN stock cloud for this morning. And of course, you know, we're always trying to bring stocks to your attention that may be active and give you a little glimpse of what's happening behind the scenes as to why they may be fairly active in trade today. So while that's coming up on your screens, I believe it's starting with the BEML today, where the government is to disinvest 26% via an open competitive bidding process. And DPAM has set the minimum net worth requirement for bidders at 1,400 crores. So keep your eyes out on that one. We then have Tata Motors and Ashok Leyland, two auto players. Strong monthly numbers coming in from them. We have two banks as well today making the cloud, Federal and Yes Bank, with their Q3 updates looking fairly strong. Federal has just broken out, I believe, minutes ago into price volume breakout. It's up at around 70 rupees per share. We then have RCF, where the government is again planning to sell at 10% of their stake. And NMDC with December production at 3.86 trillion versus 3.13 YOY, and December sales at 3.62 metric tons versus 3.04. So some good uptick in numbers for NMDC. We then have a sale in a Tata Steel as Morgan Stanley says dealer checks suggest potential for further price hikes in steel, and they're all running at full utilization right now. So keep your eyes out on that one as well. And they see a lot of tailwind for the number and room for street EPS upgrades. Finally, we have Adani Green concluding the cloud with receives LOA for 600 megawatt wind solar hybrid power project. And that's what the cloud is looking like this morning. But I think we're about to talk technicals and fundamentals with our guests. Kunal Potra and Vijay Chopra are both with us, I believe. Good morning, gentlemen, and thanks for joining in. You know, Kunal, coming to you first. We are firmly above 14,000, so that's an encouraging sign. Where does the market trend to you this week? And in light of that, what are your calls for our viewers?
So good morning, Varun. Yes, I think the markets have trended quite well. We've seen a good opening, but I think the last 15-20 minutes there has been some correction which has seeped in, and this comes as an interesting correction because after trading firm for at least the first 1 hour, 1.5 hour, the markets are now trying to go into more of a profit booking mode. So we need to see that whether this is just a short-term profit booking or whether this is just a start of a fresh correction in the market. So I think as of now I'll start to mix up my trade, at least looking at the intraday volatility. So one buy and one sell. The first one is about the mid cap stock Sumitomo Chemicals. We've seen very good pickup in of pace in momentum into this stock. It's come back to a breakout level yet again about the 317 318 mark. So would suggest a buy on this stock at targets of 333, stop loss at 310. And the second would be a sell on Titan Industries. Now I understand that the stock has done exceptionally well in the last 4 to 5 months, but many of the indicators are now getting back into the overbought territories, both on the daily as well as on the hourly time frame. The stock about that 1550 mark, I believe, could go through at least a 50-point correction from current levels. So a sell on Titan, targets of almost 1500 to 1520 range, and stop loss could be kept at 1575.
All right, thanks for that. Vijay, what are your wealth creation bets you have for our viewers which they can look at for a long-term investment?
Yeah, Karunya, good morning. And I think that, markets should take a pause. And we've seen a stupendous run till now. But I think that if at all we see some kind of a profit booking or selling, I think this would give a lot of legs to the market. Because the kind of run-up we have seen post the fall last Monday, I think that, it hasn't even, taken a week to come back and even go to higher levels. So I'm sure that...
All right. Vijay, I'll have to interrupt you right there. PM is speaking at the National Meteorology Conclave. Let's cut across to that.
एक कर दिया CSIR समेत अन्य संस्थानों ने एक साथ आकर हर चुनौती का सामना किया, नई नई परिस्थितियों के समाधान तलाशे। आपके इस समर्पण से आज देश में अपने इन साइंस इंस्टीट्यूशंस के प्रति जागरूकता और सम्मान का एक नया भाव पैदा हुआ है। हमारे युवा आज CSIR जैसे संस्थानों के बारे में और ज्यादा जानना समझना चाह रहे हैं। इसलिए मैं चाहूंगा कि CSIR के वैज्ञानिक देश के ज्यादा से ज्यादा स्कूलों के साथ, छात्र छात्राओं के साथ संवाद करें, कोरोना काल के अपने अनुभवों को और इस शोध क्षेत्र में किए गए कामों को नई पीढ़ी से साझा करें। इससे आने वाले कल में आपको युवा वैज्ञानिकों की नई पीढ़ी तैयार करने में, उन्हें प्रेरित करने में बड़ी मदद मिलेगी। साथियों, थोड़ी देर पहले 7.5 दशक की आपकी उपलब्धियों का यहां जिक्र हुआ है। इन वर्षों में इस संस्थान की अनेक महान विभूतियों ने देश की उत्तम से उत्तम सेवा की है। यहां से निकले समाधानों ने देश का पथ प्रशस्त किया है। CSIR, NPL ने देश के विकास के साइंटिफिक एवोल्यूशन और इवैल्यूएशन दोनों में अपना अहम रोल निभाया है। बीते सालों की उपलब्धियां और भविष्य की चुनौतियों पर चर्चा के लिए आज यहां कॉन्क्लेव भी हो रहा है। साथियों, आप जब पीछे देखते हैं तो
Okay, back to the markets then. Vijay, you were giving us your stock ideas. Please carry on.
So I would recommend three stocks today. My first recommendation is a low risk idea, which is Sbi Life. Presently, the stock is trading in the range of about 890.95. And I think that India is a very, very underinsured country. Even now, if you look, I think that 3 to 4% of the country has life insurance, and I think that the penetration can go much deeper. So SBI Life has a very good potential if you look at the medium to long term with the medium to long term perspective. So we can buy at around 890 odd for a target of 1200, and one should always keep these stocks for about 6 months to 1 year's time frame. So there is good money to be made in the life insurance sector where I'm fairly bullish. The second recommendation is Bpcl, which is an average risk idea, which is trading around 385.90, and I think that the government is going to disinvest in this company. This has huge value, and I think that at present somebody if buys at these present levels, or maybe in a correction, maybe 10-20 rupees down, there is good money to be made, and one can hold this stock for a target of 450, 470, and we'll see some decent up move coming in this stock. My final recommendation would be a high-risk idea, which is Balmer Lorry. Generally we do not see much action in such companies, but again, it is a disinvestment story, and the government has announced that it's going to disinvest in Balmer Lorry, which has huge assets. So presently trading in the range of about 127, 128. It could be bought for a target of 175, and I would recommend a holding period of minimum 6 months to 1 year time frame. And again, all these three stocks can fetch good returns to customers. So these are the recommendations for today.
Okay, thanks for that, Vijay. Quite a diverse array of stocks. SBI Life, obviously, lead insurer, and then two divestment candidates, Bpcl and a Balmer Lorry. So do your own research before you invest, but thanks for that. I think we're definitely going to stick on with our experts, so do stay with us. We have queries to address, but before we slip into break, this morning we caught up with market veteran Vijay Kedia, got some views on his latest mid-cap and small-cap picks. Let's listen in.
If you compare the price in the market from March low, then you will certainly find stocks are very expensive, because many stocks have gone up by 10 times or 12 times or 5 times. But if you compare, mainly I'm talking about mid caps and small cap, but you compare them from their 2018 and 19 lows, then you will find that there are still value in pockets, in many pockets. There are many mid caps which I think, according to me, are still cheap compared to their value, not just from the 18 and 19 comparison. And from their fundamental point of view, I think you might get value in many pockets. But again, as I said, that one has to be fearful and careful in this market.
Hi, welcome back. You're still tuned into ET Now and you're watching Buy Now, Sell Now. The centre has invited bids for strategic divestment in a new company, BEML. This will be open till March 1st. I said new company because we've been hearing of BPCL, SCI, but BEML is relatively a newer one in the divestment story. But my colleague Ava now joins in with a detailed report of what exactly makes it attractive. Let's listen in.
Well, BEML is certainly a stock in focus, and this is largely on the back of the news that came out that the government plans to divest 26% out of their total 54.03% stake in the company. Now, the sale is going to be via an open competitive bidding route, where the DIPAM has set the minimum net worth requirement of bidders at about 1,400 crore rupees. Now, the divestment is going to be in a two-stage competitive bidding process, and bidders have to submit their EOIs by the 1st of March. Post the evaluation, the transaction advisor will intimate the short-listed bidders about the qualification of the Stage 2 participation. Now, remember, the acquisition of 26% stake is going to trigger a mandatory open offer. Now, in 2017, the company separated their operational and non-operational land and completely hived off their non-operational businesses. So they are going to make sure now that the non-operational assets will not form a part of the divestment process. And if the hive off is not completed before the divestment, then a suitable mechanism for the same will be formulated. The management control will be shifting to the successful bidder, and companies as well as LLPs and funds are eligible to invest, but government companies have been barred from participating in the divestment. The consortium bidding is also permitted, where the lead member must have a minimum 51% stake in the consortium and a profit of at least 3 out of the immediately preceding 5 years. At the current market price, a 26% stake sale could fetch about 1,000 crores to the exchequer. Remember, the divestment target is about 2.1 lakh crores, and the government has planned the privatization of a lot of these PSUs in order to fulfill that. So BEML in focus.
Thanks, Avan, for that. Let's kickstart our viewer queries then. First up is an email from Mahesh Vaid, based in Delhi. He's bought 1,500 shares of Coal India at a price point of 270 rupees per share, and he wants our experts to advise him whether he should average at the current juncture or if they would think otherwise. Kunal, Coal India, he's invested at 270. Perhaps this must have been 1.5 to 2 years ago. Since then, the stock price has eroded quite significantly. So, given that it's almost halved at this juncture, would you recommend averaging, or should he just stay put or consider exiting?
The viewer to consider exiting over here at current levels. I don't see any major reasons why. I think Coal India could be the stock which could give you fabulous returns from here on. Remember that your stock price, your purchase price is almost double of what the stock price is currently trading. So you would what happened in the last 6-8 months or 9 months for the markets, you would want the same replica in terms of price performance for the markets, and in such kind of a scenario is where I think stocks like Coal India can give you strong returns. So my advice would be very simple, that you should look to exit Coal India over here at current levels, book your loss. And in fact, I think if you're looking at other PSU names, then why not look at BEL or even GAIL at current levels? I think both these stocks look fairly attractive. They have been far more robust stocks as compared to the other peers on the PSU pack. So I think if you want to stick to the PSU theme, then I would recommend a switch from Coal India to something like BEL, Bharat Electronics, as well as GAIL.
Okay, what about you, Vijay? What is your advice on a Coal India? What are the prospects going forward? And finally, your recommendation on the stock?
Well, I would say that this is a stock which can be kept in the portfolio. This guy has waited for a long time. And I think that, this stock technically also looks good to me. And it's a dividend yielding stock, mind you. So it's a very good time. January, February is a very good time to buy Coal India because it gives you hefty dividend. And I would say that, just average around these levels. And I think that, if the stock starts moving on, it is a great possibility that it reaches 200 odd. So one can average around these levels. So I would say that dividend adjusted, the stock can reach around 200. So I would say that no point of panic at this time. The risk reward is absolutely positive, and it's a good government company. And another fundamental point I want to mention here, that India is now stepping on the heat, and we are seeing a huge upside in steel and other metals. So for all these metallurgy related companies and metal companies, you need a lot of coal. So where would the coal come from? India definitely has shortage of coal. Although I agree that there's, India doesn't do coking coal, but again, we need coal for industry. And if at all we are, reviving on the industrial front, we are seeing manufacturing activity stepping up. So we need coal for that. So Coal India seemingly looks very good at this point of time. The risk reward is positive. So I would recommend that one can average, bring down the price, and just hang on around there, and definitely enjoy the dividend as well, because it's a very heavily dividend paying company. So I would recommend a hold and an average at these levels.
Okay. Pretty clear-cut advice from both our experts as far as Coal India is concerned. Let's move on. Harsh Saraswat of Jaipur has written to us. He wants to invest in angel broking at the current market price. Companies eating market share from players on a QOQ basis, which is very true. Kunal, coming to you first. Obviously, limited operating history for angel broking, a recent listing. But the recent data they've been putting out about their market share gains being a low-cost broker is quite exciting. Do you think a stock like this warrants investment at current levels, or would you wait for a cool-off?
Cool-off, Varun, and I believe that the stock has, remained more sideways. I think from November, when the stock had hit that 400 mark or the 380, 385 odd level, from there on, it spent almost 2 months. This is the second month on a trot where the stock has remained more sideways. 310 to 315 is the lower end of this range, and closer to 385, 400 is the upper end of this trading range. So it seems to be that the stock is now trying to spend some time in this 20% band. Of course, the data is the data on charts is very, very limited. So looking at what the data is showing so far over the last couple of months, I don't see any reason why the investor, the viewer, needs to be in a hurry to look at stocks like angel broking. I believe that wait for those sizable corrections which come into these names. For example, if the stocks drops another 10% from current levels, it could get back into that support range of 300, 315 range. So I think one needs to wait for a sizable correction. I think if it comes very closer to 300 odd levels, that's where you can begin your investments on angel broking.
Okay, thanks for that, Kunal. Vijay, how about you? You know, these low-cost brokers, see, broking used to be quite a boring business. And now, you have a lot of low-cost brokers that are really eating market share aggressively. And angel broking is definitely one of them. But how does that stack up to valuations? What's your view here?
Well, Varun, I would beg to differ that it's not a boring business. It used to be one of the most exciting businesses and one of the most rewarding at one point of time. But yes, with the entry of discount brokers and the viability of brokers getting questioned, so there are bigger ones, which the bigger fishes, which are going to adjust to the new realities. And I think that better than angel, I find companies like JM Financial, Edelweiss, and Motilal, which have a much diversified portfolio. So apart from broking, a company like JM or Edelweiss or Motilal, they do mutual funds, they do insurance, they have other verticals which are cash cows for them, and they are fairly big in funding. So I think that if you want to get into broking space, the better to be with the larger ones. So I like JM, Edelweiss, and Motilal, and I would recommend that angel can be avoided at this point of time, and one can get into JM, Edelweiss, and Motilal. And I see a great company like JM even doubling up from here if somebody holds for 1 to 2 years. So I think that go with the better brokers, bigger brokers.
Okay, well, that's the verdict coming in on angel broking. Moving on to query number 3, Bhavya Shah writes to us from Mumbai. They've been holding Deepak Nitrite since 500 rupee levels. Wants to ask whether they should continue investing in it or rather holding on to it or book out because they believe phenol spreads may contract in the future. First of all, Bhavya, congratulations. Deepak Nitrite definitely has seen nothing short of a dream run over the last few months. Kunal, from 700 levels back in October 2020 to making a fresh 52-week high just today at 1,016 bucks. Clearly, their money has doubled in it. Do you see more legs to this up move, or should they book out?
Absolutely. Congratulations to the viewer. The investments have doubled today. I think stock has hit the 1,000 mark for the first time, I think, in the last so many years. It's been a fabulous run for Deepak Nitrite. It's a stock which I track very, very closely. And I think from the March lows, the stock has bounced off extremely well from those 450 odd zones. I think it's done remarkably well. Volumes have also moved up higher consistently and considerably for the stock. But there comes a time when many of these stocks, they will also go through a time-wise or a price-wise correction. Now you have to understand that the market construct is the major ruling factor over here. So till the time the markets are looking strong and robust, we will have names like Deepak Nitrite which will continue to do pretty well for themselves. But the moment there is a whiff of a correction, or some sort of I would say mean reversion in the markets, many of these stocks will also go through their periodic profit booking. So I think if you're sitting in such an extent of profit, I would advise two approaches. One is either you have a trailing stop loss mechanism, where for example you keep a trailing stop loss of say 900, 920 odd on Deepak Nitrite, and till the time the stock doesn't break those levels, you can keep on holding the stock, or else book out 50% profit over here and then wait for the stocks to go through a round of correction, and then try and buy it back again lower as now the stock goes through a corrective phase.
Okay. Vijay, what is your view on Deepak Nitrite? Because they've particularly talked about phenol spreads, which may contract in future. So with that perspective and the overall prospects for the company going forward, what is your recommendation?
I again congratulate the investor that they have done a great job holding on to the stock, and it's also imperative that one should book profits. So I would recommend that one can book half the profits, hang on to the rest of the position, and I think that there is money to be made, and there are other stories also right there. So one can invest in Government of India companies, and some of them we have mentioned right now. So just book half the profit, so that at least you have your capital in place, and then stay invested for the rest half. So you bring out the capital, invest it elsewhere.
Okay, great. So Vijay offering slightly prudent advice: take some money off the table and then leave the rest riding, given that you've already seen a doubler. Quite amazing what a re-rating Deepak Nitrite has seen, but still trades at a deep discount to RT with similar metrics. So, I mean, you can make the case both ways. Let's switch gears toward banking. That's where the next two queries are focused. And two smaller mid-tier banks, which we don't discuss too often. Please share your views on an IDFC First Bank at current market price. Time horizon is short to medium term. This is Shyam Karani who's written to us. So Kunal, coming to you first. Any chart-based triggers to buy an IDFC First right now? Or generally, do you think it's an attractive proposition? Or would you continue to, as we've been hearing so often now, just stick with the top-tier lenders?
The top-tier lenders, that's the generalistic theme. But then for the IDFC First Bank as well, purely talking on the basis of charts, I think the stock is now heading towards a breakout level. So I think if you look at the last 3 years of chart pattern from 2017 and 18 beginning, the stock has been falling into a downward drift. It's made a pattern of lower highs and lower lows almost consistently. There have been multiple attempts towards the stock trying to break past this, lower highs and lower lows pattern. But every time the stock has faced with a huge amount of resistance. Even currently, as we are, speaking, that the stock is now nearing this breakout of this major resistance level. So I think the 40 mark or a 42 mark for IDFC First Bank could be a big resistance breakout. If the stock manages to surpass about this 42 mark, then I would categorize this as another mid-cap name on the banking side, which is trying to show some long-term pattern breakout. So it's an interesting play, but I believe more confirmations could be in line only if the stock breaks past that 42 level.
Okay, so technically, Kunal doesn't advise entry until it breaks that critical resistance of around 42 rupees. Vijay, what about you? Fundamentally, is there anything attractive about IDFC First right now? I mean, we know it's a great management. He talks to ET now quite often, but are there any near-term triggers that would warrant investment?
Well, to some extent, I agree to what Kunal says, and I think that the stock has been a slow mover and it hasn't participated in the rally. But all said and done, if the things are settling down for IDFC, there has been a change of management. Mr. Vedanathan came up from from Capital First, and there has been a merger. And in a country like India, it takes time for a company to actually merge and work together, two companies becoming one. It takes time. So I think that if somebody is a long-term investor, only then one should look at IDFC as a holding bet. Otherwise, you said if it's a short-term investor, I won't recommend that be in IDFC. There are other options. You want to make money in the short term, I think Axis Bank can give great opportunities. The Federal Bank is also a great bank to have. Bank of Baroda, SBI. There are public sector banks which can, earn you good, return on capital employed. But IDFC, I would say, If somebody is a long-term investor, it's an ideal price to hold on to the stock, just hold and forget for some time. And I'm sure that, you know, money can double up in 2-3 years time. So it won't be a, you know, a drag on the portfolio at all. So long-term investors, yes, they can buy. But for short-term investors, I would recommend that, you know, look somewhere else, as I've mentioned.
Okay, all right. Moving on to another question that the same viewer has on another private sector lender. That's Yes Bank. Kunal, any view you have on Yes Bank, because you have been a bit cautious when it comes to this particular counter for the last few months. Has it changed?
Cautiousness for stocks like Yes Bank, and in fact, Tanya, and many of my interactions as well, on the channel as well as on many social media fronts, I've been mentioning that Yes Bank, provides a good opportunity, at least on charts, if it comes closer to the 12.5 odd level. And the same was the time when ITC was trading at 160, 165 levels as well. So I believe if Yes Bank comes back into that kind of a territory, then makes at least good technical sense to try and buy the stock at lower levels and then wait for it from a longer term to try and show signs of turnaround. We had seen that level being hit, I think, a couple of months back, I think 1.5 odd month back, if I'm not wrong, where the stock had come back to that 12.5 odd zone and then rallied from those kind of levels. So I would suggest that if the investor is not looking at it as a purely short-term gain, then I believe you should hold, and if you're looking to enter, I would say still suggest that 12.5 to now maybe 13 odd levels could be a good level for you to try and buy Yes Bank, especially if your view is long-term.
All right. What is your verdict then on Yes Bank, Vijay?
I think, if you look at the larger picture, the way I fundamentally look at it is what is the risk reward? Now, Yes Bank at 17, 18 rupees, what can you lose here? So for long-term investors, they can start nibbling into the stock, and if at all you get a fall, you get it around 15, 13 maybe, you can keep on accumulating. This is an accumulation stock, and it can give maybe 3-4 times of your investment, if everything goes right, because again, it's a merger story. Again, SBI has taken over the reins, and not exactly a merger, but SBI has taken over the reins, and as the environment becomes conducive, and there are chances that a lot of NPAs would no more be NPAs, or there could be great recoveries coming from them. So the bank can become healthier over a period of time. So risk reward is absolutely positive at this time, and one can take a risk of 3-4 rupees, and keep on buying the stock for a long-term perspective, not for a short-term or a medium-term, because for traders, probably, they can get a rupee or two here or there, but I see, such stocks maybe doubling up or maybe tripling in times to come. So it's a long-term story. It's a positive risk-reward investment. So I would say that keep on nibbling into the stock.
Okay, well, thanks for that, Vijay. Quite clear. Yes Bank's worth a nibble. Even Kunal kind of said that. But a big thank you to both of our experts for joining us, as always, on BNSN. Great to get your perspective, and we look forward to having you back very soon. Time for a quick break here on Buy Now Sell Now. We'll be back in just a minute. Stay tuned.